Hi guys, welcome to Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Tuesday morning, cues aren't looking all that great, subdued to say the least. And yesterday, remember, we had a breakdown of sorts, in intraday trade. Of course, we ended off the day's low, but we did start on a very strong note yesterday. And within minutes, we saw the texture changing and how, from a triple-digit gain, we went to a triple-digit loss. But we did manage to end around that 24,800 mark. Today, of course, 24,567 on the downside. That's Friday's swing low. That will be in focus because if that breaks, then we could be in for some serious selling. Of course, we'll touch base with our technical experts and ask them what kind of a sell-off we can expect if the Nifty really breaks below that crucial level. Lots to watch out for over the next half an hour. We have numbers, lined up from Bajaj Finance, Paytm, Zomato. Of course, we also have that fundraise that we'll be keeping an eye out on when it comes to Zomato. Lots of other stocks to discuss, result reactions, and of course, all your stock-related queries will also be in focus. So, if you have any queries, send them in to us on our live feed. We'll try and take them up. But of course, before we move any further, let's take a look at the top headlines or top stories at this hour. Wall Street ends mixed after capping a sixth straight week of gains. The Nasdaq gains, but the Dow breaks a three-day winning streak. The 10-year Treasury yield surges to highest level since late July, 4.2%. That's where the 10-year Treasury yield is at. Asian markets trade with losses following mixed cues from Wall Street. The GIFT Nifty is also suggesting a flat start for the Indian market. Meanwhile, in the commodities universe, Brent crude is back around that $74 a barrel mark, while gold is consolidating around record highs. Shares of Hyundai Motor India will debut on the exchanges today. India's largest IPO was subscribed nearly 2.4 times the shares on offer, and the grey market premium is reflecting a positive debut. But this morning, I was just reading some reports. The grey market premium has once again slipped into the red, so we could be looking at a subdued listing. In key earnings to track, Bajaj Finance may see net interest margin decline year over year, while provisions too may rise. Also watch out for numbers from Paytm as well as Zomato. Well, those are all the headlines at this hour, but taking a look at the cues for trade, yesterday, as I mentioned, we saw a collapse during the day. After kicking off trade on a positive note, we saw a big turnaround, and we saw the Nifty, in fact, taking in a triple-digit loss. The broad end of the markets were also, also saw a sell-off, so to say, 1.5% kind of losses coming in on both the Nifty mid and small cap indices. Of course, FII sell-off, continues unabated. FPIs have pulled out as much as $10 billion, record $10 billion from the Indian market. And yesterday as well, we saw the FIIs remaining net sellers. In terms of the movers and shakers yesterday, HDFC Bank was among the top Nifty gainers, and it saw a 3% up move in a weak market, given the fact that numbers were pretty healthy. On the flip side, you had Kotak Mahindra Bank, that stock was down 4%. Among the top laggards, as both, the second quarter margins had slipped both on a quarter-on-quarter as well as YY basis. Of course, there was stress in MFI segment, credit card business weakness. These are some of the factors that led to an earnings miss for Kotak Mahindra Bank, and the street was quick to punish the stock as well. Bajaj Auto, on the other hand, gained almost 3% or so on the back of positive commentary coming in from Rajiv Bajaj. He's, undeterred by all the noise around festive sales, and he said that, it's an evolving situation, and he stuck to his long-term target of 20,000 rupees on the stock. Tata Consumer, on the back of volume degrowth in the second quarter, we saw 8% cut coming in on the shares of Tata Consumer. Entire FMCG pack was also under pressure because of that. Both Nestle and Tata Consumer have seen volume degrowth, and that seems to be the trend when it comes to FMCG earnings in the second quarter. In terms of the put call ratio, the Nifty put call ratio fell to 0.8 vis-a-vis 0.93 rather in the previous session. And if you look at some of the stocks that are in F&O ban this morning, at least the new entrants are India Mart, Manappuram Finance as well as Piramal Enterprises. Still in ban, we have Aarti Industries, Bandhan Bank, Birla Soft, Chambal Fertilizers, GNFC, Granules India, Hindustan Copper, IDFC First, IEX, L&T Finance, PNB, RBL Bank, SAIL. Some of these companies, of course, continue to be in the futures and options ban list. But two stocks have exited the F&O ban list, and they are the likes of Nalco as well as Tata Chemicals. Uh, I was mentioning that foreign investors remain net sellers, and yes, yesterday as well they sold off shares worth 2,200 crore rupees or thereabouts in the cash market, but DII buying continues to support the market. So you had 3,200 crore worth of buying coming in from domestic investors. But let's touch base then with our technical expert if he's joined in. We are joined by Jay Thakkar, who's the head derivatives and quant research at ICICI Securities. Jay, great to have you on the show. Yesterday we saw a complete breakdown after a positive start. From a triple-digit gain, we went to triple-digit losses within minutes of the market opening. 24,567, that is Friday's swing low. Would you say that a break below that crucial level would lead to further sell-off? If yes, what kind of support level should one look at that point of time?
Hi, very good morning to you, Nandita. And as far as markets are concerned, I would say that on the upside, 25,000 is a clear resistance, at least for this week. I mean, there's 2 more weeks to go for October expiry of this series. We have seen the 5 week series now for the October month, and I think that 25,000, at least for this week on the upside on Nifty, is a very clear resistance, and until those levels aren't taken off, the overall trend, Nandita, is going to be sideways to negative because we are seeing a good supply at higher levels. Even if you look at the Bank Nifty, it's not, it did manage to, move beyond the levels of 52,500 yesterday, on back of positive move from HDFC Bank, but then that too, gave up, and we saw a huge cut coming in two banks, mainly RBL and Kotak Mahindra Bank, and Kotak Mahindra Bank among the large cap as far as private sector banks are concerned, and a cut more than 7% there. On a closing basis, almost it was 5.5%. But then that actually clearly, had put that pressure on the Bank Nifty to move from up to down. So net, what I would like to say is that 24,500 immediate support, 25,000 on the upside immediate resistance. That's the 500 points range within which we would see Nifty in fact trading sideways. But if 24,500 levels are broken, we would see continuation of a downtrend as well. So I would not be betting on the upside until 25,000 levels are taken off on Nifty, and 52,500 levels are taken off on Bank Nifty.
Okay, those are the important levels to watch out for. Of course, you've already touched upon stocks like HDFC Bank. Want to get in your thoughts on a Union Bank as well. It reported numbers yesterday. Profit growth was solid at 35% or thereabouts, but net interest income was down almost 1%. Gross NPAs have, come in lower on a quarter-on-quarter basis, although net NPAs were slightly elevated. Looking at the charts of a Union Bank, of course, the stock has seen a drubbing of sorts in the last 1 month, 11% or thereabouts. In the last 6 months as well, lost somewhere around 25% or thereabouts. Within the banking pack, how is this particular stock poised? Do you think it could test or retest its 52-week lows now, because it has been stuck in a downtrend?
Well, Nandita, first of all, as a disclaimer, I would say that mainly I track, the F&O segment stocks. But then as far as, the non-F&O stocks are concerned, as far as Union Bank is concerned, I see the momentum getting weakened on the monthly charts as well, technically, Nandita. And that clearly indicates that the trend has shifted from up to down. Although in the short term, you might see some, bounce back if the stock has gone quite oversold. It has been falling. And we have seen that PSUs have any which ways, PSU banking pack has any which ways underperformed the private sector banks. So that underperformance might continue for some more time, because overall, if you see the money, even if that has to come back, it will come back first in the private sector banks as compared to the PSU banks. Only one stock, that is SBI, from the PSU banking pack, which I think is looking positive and may outperform the PSU bank index as well. Apart from SBI, any other PSU bank, I think, is not likely to perform better, at least in the short term.
Okay, that's the view on a Union Bank. Two stocks really. Bajaj Housing, it reported good set of numbers. Profit rose 21%, revenue also, similar 20% jump on a YY basis. But, what will be in focus will also be Bajaj Finance, because numbers are slated to come out today. Net interest income is likely to rise by 32%. Profit is also likely to see a good 33% jump. There could be an AUM growth of somewhere around 30% on a YY basis, 7% on a sequential basis. But margins are likely to be lower despite, in fact, lower due to higher cost of funds. However, there could be surplus liquidity due to the stake sale in Bajaj Housing via the IPO. Looking at Bajaj Finance, trend has been on the downside, even if it, made an attempt to make some kind of recovery over the last 3 months, it hasn't really been able to do so. Last 5 sessions also ahead of earnings, it has been under pressure. 6,800 is where it's at, a good, 1,000 to 1,100 rupees away from all-time highs. Is it time to take, time to treat Bajaj Finance as a positional play, or is it time to rotate out of Bajaj Finance and look at other NBFCs?
See, Bajaj Finance has been an underperformer, Nandita, at least since its peak in September 21. So it's been almost like 3 years now that the stock has been trading within this range. On the upside, we have been seeing 8,000, 8,200, 300 levels, and on the downside, although it had gone down to almost 5,000, 5,500 range. Now the range seems to have shifted on the upside, and that has come to around 6,000 to 6,500 range now. So that 1,000-point shift has been seen on Bajaj Finance consolidation since past 3 months. So this entire process of consolidation has led to a formation of an ascending triangular pattern. So one can buy around 6,000, 6,500 range for sure. The risk reward would be positive.
Right, that's the view in Bajaj Finance. Hold that thought. We are getting the first ticks on the screens. Then it is a mixed start. For the markets, the Nifty shade in the red, even the Sensex, has, opened in the green, but has given up those slim gains. Mid-cap index managing to hold out at the current juncture. So 24,770 is where we are at in terms of Nifty. Extremely flat, no clear direction emerging at the current juncture, but of course, a subdued start nevertheless in tandem with global peers are doing. But of course, earnings will take center stage once again. The markets have been quick to punish those companies that haven't reported a great set of numbers or that have disappointed in terms of second quarter numbers. And today as well, given the fact that we have numbers like Coforge, Persistent, you have Bajaj Finance, Zomato, Paytm, all of these numbers will be in focus. But for now, just edged back into the green slightly. The Nifty Bank Index continues to be in the red. 51,900 is where it's at. Advanced decline ratio 1:1, even Stevens at the current juncture, but slightly in favor of declines. And in terms of sectors, I want to see which is that sector that's managing to hold out, in a sideways market. Autos, sole sectoral gainers yesterday, today as well. Extending those gains, very slim gains at this current juncture, but we'll have to see as we progress if they pick up pace. Energy pack is doing okay, given the fact that crude is back around that $74 per barrel mark. But what's standing out is the IT pack, 0.3% kind of an up move coming in there. You have, pharma pack also not doing all that poorly. You have metals, almost 0.2% kind of gains coming in there. So aside of banks, most of the sectors are trading in the green. Of course, it's also the Nifty Financial Services weekly expiry today. So financial pocket will be in focus today. But in terms of individual movers, also want to see which are the stocks that are leading from the front today. Power Grid, Bharti Airtel, Altic Cement. Brokerages have kept the faith in this particular stock after an earnings miss in the second quarter. Of course, this quarter is seasonally weak for cement companies due to monsoons, etc. But margins are expected to pick up pace in the coming quarters for the likes of Altic Cement, and which is why Altic Cement also, in fact, emerging as a top Nifty gainer at the current juncture. Tech Mahindra, Adani Ports, Wipro, Infosys, so tech pack in focus. Most of them are trading with gains. ICICI Bank, gaining traction. Titan, Shriram Finance, Bajaj, Finserv, ONGC, Trent, these are some of the other movers on the index. What's not doing well is SBI Life, that's the top laggard on the index. Kotak Bank extending its losses from yesterday. Tata Consumer as well, extending losses. Bucking the trend when it comes to the IT pack is HCL Tech. It's among the top laggards on the Nifty. Sun Pharma, Tata Steel, Britannia, Bajaj Finance ahead of numbers is fretting in trade. Looking at the market open, Jay, what would you be recommending for our viewers with the 1 to 2 day or perhaps 1 week time horizon?
See, as far as in index views, right, Nandita? Or the stock specific views you asked? I'm sorry, I
Uh,
didn't get.
no, so your stock recommendations for viewers?
Sure, sure, definitely, So, well, Nandita, as far as the short-term trend is concerned, as I said, on Nifty, it's sideways, 25,000 to 24,500. I mean, within this sideways momentum, Nandita, there might be few stocks which might go up. And definitely, we'll be seeing some stocks which will be falling. So, Gas Authority of India Limited, GAIL, that seems to have clearly broken down from a sideways consolidation. So I think at current levels of around say 219 spot levels, if at all there is a bounce towards the levels of 225, then too one can add shorts. So I would say a range of 219 to 225 should be utilized as a selling opportunity in GAIL. Keeping a stop loss at 232, one can target 210 to 205 going forward. So there's a sell recommendation on Gas Authority of India. I have a buy recommendation that is on SBI. I mean, I think that SBI from the banking pack has outperformed relatively as compared to its PSU banking stock. So I think that SBI at current levels of 811 to say 807 is a very good buying range. So 807 to 811 12 is a good buying range. One can buy this, placing a stop loss below 800, targeting 825 to 835 going forward. So this is likely to outperform the PSU banking index. So one short that is GAIL, that is again from the public sector enterprise, and SBI is also public sector enterprise. So both the PSU stocks, one long and one short.
Okay, one long, one short call coming in from Jay. Jay, there seems to be some audio issue with your feed. We'll try and reconnect with you and get you back on a better audio. Till then, just taking a look at the markets, I want to quickly point out, what's happening at the current juncture. We have picked up pace. 24,800 is back on the charts, a 60% bump up on the Nifty, 24,850. We're in fact, we are around those levels. The Sensex as well is, clocking in a good 200-point up move. Mid-cap index building on early gains. The Nifty Bank index has also managed to come back into the green. Of course, I spoke about Altic Cement, that being the top Nifty gainer. Let me quickly take you through, what the brokerages have to say about this company after a slight miss in the second quarter. CLSA has a hold call on the stock. Target price is at 11,500 rupees. The stock is somewhere around 11,000 at the current juncture, but 11,500, that's the target that has been set out by CLSA. The brokerage has said that the decline in the second quarter EBITDA was driven by multi-quarter low profitability, and Q2 results, although there was a slight miss, they do indicate a better second half for Altic Cement. In fact, the brokerage believes that the industry demand growth in the second half of the current fiscal is likely to be in double digits. And, the company is poised to achieve the specific cost saving initiatives that it is taking. It is expected to yield results, and it will augur well for the medium term profitability of the company. And the strong capacity addition pipeline is likely to drive industry leading volume growth for Ultratech in particular, which is why CLSA has stuck to its hold call when it comes to Ultratech Cement, although it does see some bit of downside risk to consensus as well. But all in all, second quarter or second half of the current fiscal looking better for Ultratech Cement. Nomura, on the other hand, has a buy call. Target price is at 12,350 rupees, a good bump up from where the stock is at right now. And Nomura has also noted that the second quarter margins are likely to improve. In fact, the second half margins are likely to improve here on. And the EBITDA per ton is likely to expand on account of lower power and fuel cost per ton. And the company seems to be on track to achieve capacity expansion and its cost reduction targets as well. Jay, if you can hear me, Ultratech Cement, how is this particular stock poised on the charts? Is the top Nifty gainer at the current juncture. We have target prices ranging from 11,500 to somewhere around 12,350 that brokerages have marked out. What kind of an upside do you see? Is there a possibility of a breakout over the next 2 to 3 months, where do you expect the stock to head from here?
It is at a very, very critical support level, and from which it has bounced back. I mean, the critical support level for Altic Cement is 10,700, and it has managed to bounce back from those levels. So it can, continue its bounce until the levels of 11,400 to 500 range. Now that would be the range to look out for going forward. If it managed to surpass the levels of 11,500, Nandita, then yes, it can head towards the all-time high again. Failing to surpass 11,500 can lead to some consolidation or maybe a trend reversal thereafter. So this bounce in ultralight segment is very critical, as I said, because the long-term uptrend line support right from 6,000 level is quite intact, and that would be intact if the 10,600 levels are held on the downside, which as of now it has been holding up. So 11,500 I'm looking out for in the short term, if at all it bounce back from here on. But that would be a critical level to watch out for on the upside for the trend further to continue. Failing to do so, the 10,600 level could be in danger.
All right, those are the levels to watch out for on Altic Cement. In fact, the entire cement pack seems to be buzzing this morning. And since we have a query coming in from one of our viewers on the cement pack, on one of the cement stocks, let me take that up as well with you, Jay. Abhishek Singh wants to know your thoughts on Orient Cement, and his timeline is 1 year. Orient Cement has seen very good traction, right? In the last 1 month, the stock is up 24%. Even in the last 5 sessions alone, it has amassed gains of somewhere around 19.5%. 360 is where it's at. In fact, it did hit a fresh 52-week high in early trade today, 379. Do you see the possibility of higher highs of somewhere around 450 or thereabouts? Is this a breakout stock, and do you see further up move here?
Definitely, no. Orient Cement has been a very good performer, I would say, lately, and we have seen a good bounce coming in that stock, particularly right from 275 now above, its all-time high levels. So for sure, the trend out there is positive. It has been outperforming the entire cement pack. So the trend is positive, Nandita. I would say we have seen a good volumes, in fact, building up right from the lower levels. So now on the downside, 350 is a very critical support on a closing basis. Till 350 levels are held, the trend continues. I mean, yes, you can see the stock moving higher beyond 400 levels as well. So, the risk reward is still favorable on the buy side.
Okay, that's the view on Orient Cement. But, a couple of banking queries trickling in on our feed as well. I want to quickly bunch them up together and take them up with you. First of all, Srivardhan Gupta is asking about RBL Bank, and is it at good levels to enter for the long or medium term? Of course, numbers were a disappointment. Yesterday the stock did see a fair bit of correction on the back of poor numbers, credit card business, MFI business, stress in all those segments. And the company has said that it expects things to, get better from end of third quarter or thereabouts. Aside of that, we have Satya CK also writing in, and if he wants to know whether IndusInd Bank or DCB can be added for a 1 to 2 year time frame. All these three stocks, RBL Bank, IndusInd Bank and DCB, how would you advise traders and investors to look at these stocks?
Well, as far as RBL Bank is concerned, it is definitely not a stock to be in. From the technicals or derivatives point of view, I would say, Nandita, it has clearly weakened. The monthly momentum indicators are in the sell mode. It has broken the uptrend line support. We saw a huge cut yesterday post its results. We have seen a clear shorts getting built up on the stock. So there is no reason for me to say that buy RBL Bank right now or even on dips. And what has happened is, the entire move, or a bounce which we had seen right from 2022 lows, now appears to be a three-wave corrective bounce. So I think the overall long-term structure is still not positive. It could have been had it, held on to its support levels of 225. But since the break of 225, it has clearly shifted the stance from positive to negative, and the trend has changed. So I don't have any technical or derivative reason or rationale. I would say buy RBL Bank now, or even accumulate at the lower levels. As far as IndusInd Bank is concerned, out there too, the monthly indicators have gone into the sell mode, which is not positive, Nandita. However, at this juncture, I would say that still there is a hope that if 1200 levels are held on IndusInd Bank, 1200, that's a very, very critical support, which is still 100 points away. So if 1200 levels are held, I mean, those who are holding it for a long term can continue to do so, can add at these levels as well. But failing to hold 1200 levels going forward might change the outlook on IndusInd Bank as well. I mean, like that of RBL Bank. So it has not given the final signal, but most of the signals are in sell. 12 final, nail in the coffin would be 1200. If those levels are broken, I think the long term structure there too will be disturbed. And else, if it takes support there, it would be, coming out, ventilator kind of a thing. And as far as DCB Bank is concerned, that's been consolidating since long. I mean, this is not an FNO. However, I would like to say that this, the overall rise or the moves in DCB banks are not impulsive, which indicates that it's not a stock which is in the momentum either in the up or down. It's completely sideways. So it's better to be avoiding the stocks which are not in a clear up or a down trend. So there are directional led stocks, it's non-directional or non-trending stocks. So it's not time to be in DCB bank.
Okay, got it. There's another query on IDFC first. This one's coming in from Itup. This stock continues to be in FNO ban and it has been so for I think over a week or so. What should one do for the short to medium term here?
Well, IDFC First Bank had a good run. In fact, this stock has the history of not performing or maybe just trending lower. But then with the good leadership of the head oncos out there like Vaidyanathan ji, I mean the stock managed to bounce back and it did well. From 30, it went to 90, 100 levels. So it moved 3x from its lows. But then again, since September 23, since last year, it's been almost 1 year, the stock has been underperforming. So I would say that the I would say the term of Vaidyanathan ji has been extended, which is positive for the bank. Definitely, under his leadership, it has grown. But then 65 is the level to watch out for going forward. If those levels are held, 65, I think there is a good chance of a bank to recover from the current fall. Failing to hold 65 on a closing basis would again change the overall trend from up to down, and it might continue to underperform.
Okay, that's the view on IDFC First Bank, but there's a query that's coming in on Glenmark Life as well. Jayvant wants to know your thoughts on this stock. After a good up move over the last 6 months, the stock has succumbed to selling pressure. In the last 5 sessions itself, it has given up a good 10% or thereabouts. Do you see 1000 levels at risk? It's at 1080 or thereabouts at the current juncture. Uh, I mean, will it break 1000 on the downside? And if yes, time to average? Okay, I think there is some issue with the feed, but let's quickly take a look at how the market texture is changing. As of now, we are holding out in the green. The mid cap index, however, has slipped into the red. 0.3% kind of a drop coming in on the mid cap index. The breadth is looking very poor at the current juncture. It's almost at 1:3, the advance decline ratio on the NSE. So 568 advances to 1650 declines. So breadth looking poor, and it's evident because the Nifty mid cap index has slipped into the red. But let's see if Jay is back. Jay, we were talking about Glenmark Life. It's there is a query on this particular stock. The stock is down 10% in the last 5 sessions. 1000 levels at risk, and if yes, time to average.
Well, see, on a monthly chart, if you see, Nandita, Glenmark Life Science, monthly degree, it had formed. I mean, I see generally, charts from expiry to expiry. I mean, that is what we have. That's how we have a view, how the rollovers are happening, either if the stock is FNO or non-FNO. So it's about the overall market, Nandita. So, based on the expiry monthly charts, this is a non-FNO stock, I understand, but I see the overall market only based on that. So I see that it had formed a shooting star candlestick pattern, very nearby to a greenstone candlestick pattern. What does that mean? Is that from the higher levels there was a higher supply, good supply, because of which the bears could control the overall fall. And thereafter, the stock has managed to bounce back, but it was unable to surpass its previous highs, indicating that the short-term trend is sideways to negative. So there is a chance that it might fall below 1,000 levels as well going forward.
Okay, I want to take up a query on Suzlon as well. ARC has written in, wants to know your thoughts on this particular stock. He entered at 72 and a half, and he wants to know, will it keep going down or will it see a comeback? The stock is under 70 rupees at the current juncture, but this stock, of course, it's been a phenomenal run. Last 1 month, of course, it has shed quite a lot of weight. But, do you see a trend reversal here anytime soon? 86 was a 52-week high, but can an investor expect levels of 100? If yes, by when?
Well, Suzlon technically has definitely improved quite a lot, and I think that the one who's holding it can continue to do so. The only thing is that it has moved quite sharply from 5 rupees until 90 rupees. Nandita. So that was huge. So now I think that it can see some profit booking if the profit booking is witnessed in the markets. So the trailing stop loss should be very near, so that you don't lose much. It should be 60 rupees. So 60 is an important support for Suzlon going forward. If that breaks, you might see a deeper correction coming in as well.
Okay, before I move to more queries, any thoughts on Tata Consumer? The stock saw its biggest drop since 2022 yesterday, reacting to earnings, of course. Do you see a breakdown of significant levels? What kind of support levels should one be looking at? Should one average or should one, get out of the stock?
I think the trend has definitely shifted from up to down, Nandita. As far as Tata Consumers is concerned, there was a deep or huge cut in yesterday's trading session, so there can be a bounce back for sure. I mean, since it has gone to oversold after yesterday's fall, already it had fallen quite a lot, and now it has gone to oversold. So I think one should wait and watch right now, should not panic. If at all there is a bounce in till the levels of 1100, 10% from here on, 9 to 10%, there is when one can review again and take a call whether to exit or maybe continue. But then the stock is definitely in a downtrend. So momentum has weakened. The stock's momentum, upward momentum or a journey would start only beyond 1200 levels, which is 20% away from this current levels. So kind of shorts which I've seen build up in this stock in last couple of weeks clearly indicates that the trend has shifted from up to down. So either you take a call or review it at 1100, or if the stock is unable to or is not able to bounce back, and if it further breaks, say 980 levels, then one can exit. So 980 below there, those levels of trades, exit for sure. Else you can review it at 1100.
Okay, Jay, that's the call on Tata Consumer. But with that, we've come to the end of the query segment. Would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Look forward to connecting again and always appreciate your sharing your thoughts on queries and sharing recommendations with us as well. Have a great day.
Thanks so much, Nandita. It's always a pleasure, coming to your show on Money Control. So definitely would be sharing our views going forward as well. Thank you so much.
Thank you. Thanks a lot. With that, of course, looking at the market, at least for now, we are in the positive zone, holding on to the 24,800 mark, although the mid-cap index has slipped into the red and the breadth is looking extremely weak at the current juncture. 1:3, that's the NSE advanced decline ratio. But on that note, let me also bring on board a big market voice. As I had promised at the start of the show, Sunil Subramaniam, eminent market expert joining in. Sunil, always a pleasure chatting with you, but the mood is pretty grim at the current juncture, right? Extreme volatility, lots of factors at play, confluence of factors, so to say. Earnings expectations were muted, but they have still managed to disappoint. FII outflows record $10 billion. And of course, we've seen China emerging as a key threat. They've been, they haven't really announced any substantial stimulus, but they have been doing things to revive their economy as well. Do you still expect Nifty to end the year around that 27,000 mark, or do you think that's a bit overly optimistic at the current juncture?
See, I think a year end is still quite far away because I think the whole move around China, you were right that the stimulus hasn't come out as promised. But the move around China is also linked to the fact that the margin of safety is higher in China compared to India, given the valuation. So if you are allocating money as an FII, the chance of China to fall is far less than for India to fall from the earnings outlook and all of that. So the US elections in November, I think that's the key figure. And I would say by December, the market should show signs of recovery. Whether 27 is going to happen or not, wait and see. But remember that the fall in India could have been much greater if not for the buying by so when FIs come back, we'll see double barrel recovery. So it could be a very fast recovery happening. So just wait for the uncertainty to clear. That's all I would.
Right. Let's take stock of the earnings season. The earnings that have trickled in so far. Talking about the FMCG pack, volume degrowth has been a trend so far in the second quarter. The likes of Nestle, Tata Consumer, and they were duly punished by the street as well, as there are signs of urban demand also slowing down. Although rural recovery is expected to be fairly gradual. The kind of PEs, price to earnings that these stocks command. Do you feel that the correction could intensify here on? Your thoughts, and if yes, would it be a pocket that you would look at?
No, you see, I don't expect the FMCG stocks to a big correction because I think that yes, the festival demand is more around consumer discretionary. So I don't think that was factored in. And these are safety plays. So to the extent that they are a big part of the index and fire flows, passive flows, when you say 10 billion outflows, it's not that everybody is pulling out. There's some money coming in and a lot of money going out. So the passive flows would still allocate to FMCG. So I think the downside risk in FMCG is limited. The upside is also limited. So it's a safety play. So I'm not sure that unless we see a strong urban recovery in demand in FMCG, right? Because the commodity prices are the other factor which affect the ETFs, right? So we have to watch on both these factors. So I would say stick to FMCG as a safety allocation. No need to make any strong moves either way.
Another interesting pocket that I want your thoughts on is the entire cables and wires segment, right? Players like Polycab and Havells, there's intense competition in this space, and given the elevated competitive intensity in the wire segment, companies are making efforts to sustain the strong growth trajectory as well. How do you see the growth potential here, and valuations wise, do you feel they are expensive and one should wait for some kind of dip to get into these stocks?
I think the potential for them is good, given the kind of you're seeing. You saw the real estate sales in Mumbai over Navaratri. Cables and those are naturally linked to the construction sector. But I agree that valuations too are stretched. So I would say at this stage, wait and watch. I'm not really concerned, but I don't think they've corrected. You have to wait for some more correction if you want to add now. The valuations are still a bit rich.
All right, a couple of more questions then. Moving to this hot debate or raging debate over how festive demand is really shaping up, at least in the auto space. We had Mr. Rajiv Bajaj speaking to CNBC TV18 yesterday and said that the markets are reacting based on a temporary understanding to an evolving situation. Would you also be in the camp that believes that festive sales will pick up as we go ahead? And he's undeterred and he's stuck to his target of 20,000 rupees on his stock. But, obviously we'll not be talking about stocks and targets from you. But do you see the festive sales picking up pace as we go ahead into the festive season? And after the dream run in autos, is it still time to stay put, or is it time to take some money off the table and rotate into some underperforming sectors that have better potential?
Okay, that's a lot that you put on the table. See, I think a festival season demand, I mean, it's a bit early to say because Diwali bonuses get paid around, closer to Diwali, and Christmas also follows. So I still retain a little bit of optimism that festive sales will pick up. Now, obviously, the market was over anticipating, and there has been a correction reaction because initial festive season numbers haven't played out. So Rajiv Bajaj has his perspective, but I would say that generally speaking, that uh, this festive season, there is, I think, an impact of inflation on people's pockets, right? I think food inflation has hurt quite a bit. Petrol prices and all haven't come down. So, to that extent, I think that, and I will also make an interesting point. I think people are more savings oriented now. I think if the data comes out, you'll see that from the consumer surplus, people are relating little more to savings than to consumption. So there has been a sentiment issue around consumption, I think, for quite some time and still taking time to pick up. The data on the ground is not yet supportive of any strong festive season, but I still retain hope. If you wait for another week, we'll get a better sense of it. Now, from a valuation perspective on auto, see, the point is that two-wheelers, for example, if you look at, right, they're strongly reliant on rural demand to pick up. Now, while rural demand has been growing faster than urban, you haven't seen the kind of strong pickup in the two-wheeler segments that was anticipated despite a good monsoon, right? So that then tells me that it's a time to be a bit cautious on the two-wheeler side, but longer run it should pick up, and I think the whole K-shaped recovery bit is still playing. It's still the high-end products on the real estate auto that are selling more than the low-end products. So I think we have to reassess the situation post the festive season to see what call to take on the auto pack. I think let's wait for the festive season numbers to actually pan out. And I'm quite keen, like Mr. Rajiv Bajaj said, I'm quite keen on the commentary of the companies, right? Rather than the actual numbers of the season, I want to see how they look for the year ahead. That would be a more critical decision making on whether to buy some of these sectors and stocks, because I think the market is also in a right position to start discounting FY26. So this, while this initial disappointment might be there, if you look at the guidelines for next year and then take a call, would be a better bet, and I think the market will also react that way to that.
Right. I will have to let you go on that note. But before I let you go, what would your top, picks be for the new Samvat? Obviously, no recommendations, but what's on your radar?
The top private sector and top public sector bank, both of these I think will do very well.
All right, that's the view then. Private and public sector banks poised to do well in the new summer. With that, Mr. Subramaniam, always a pleasure chatting with you. Look forward to connecting with you again. Have a great day.
Thank you.
Well, with that, of course, almost at the end of the show, but just about 15 minutes or less than 15 minutes to go for Hyundai India or Hyundai Motor India to debut on the Indian bourses. Now, of course, it is all expected to list with much fanfare, given the fact that about 200 Hyundai executives will be present in Mumbai for the listing. The company's 28,000 crore rupee IPO, of course, which is India's biggest to date, was subscribed 2.4 times the shares on offer after qualified institutional buyers came to the rescue. Retail investors' portion was booked 50%, while non-institutional investors category was subscribed 60%. The QIB portion was a big hit. That saw a subscription of almost 7 times the shares on offer. The grey market premium is reflecting a slightly positive debut, could be, but we'll have to find out at 10 a.m. whether the stocks list at a discount or at a premium. But of course, 10 a.m. is the time that we get to know. But for now, it is a fairly choppy market, although we are holding on 24,850 on the screens at the current juncture, but broader end of the markets under pressure. With that, it's time out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and of course come back and join us for Closing Bell as well.